Hi, can everyone hear me? Tim and I think Wahida, right? That's what it is.
Yes, we can hear you.
Okay, good. I will be just sharing my screen on the presentation and then we can go from there. Can you see?
Yep.
Okay, good. So I think like everyone knows we have COVID-19 going on. I will specifically talk about how does the financial services are being impacted, how are the sectors working through, and then it will be going through what roles are available in the financial services and what roles in the near future will be available and how you can prepare for those. So a little bit about myself. I am NYU Tandon alumna, completed my master's in management of technology in December 2019. Currently, I'm working as a finance manager in ADM. And for those who do not know about ADM, it's Archer Daniel Midland. It's a food processing firm based out of Chicago. Mainly, I'm responsible for groups like Global Business Services, Internal Audit, Accounting, and Tax. I generally work on budgeting, forecasting, annual operating plan, and performance reporting. So that's broadly about me. If anyone has any questions, just maybe you can go ahead and ask the question. I am not able to see the chat window though. So starting with the introduction, obviously COVID-19, it's been, I think almost a year and more than a year. We are still going through COVID-19. Very unprecedented impact on the way we live and do business. It's really early still to see the after effects of the pandemic. It can go on for short term versus long term. It's expected within financial services industry, the impacts would last up to 6 years to get back to the normal or near to normal of the total industry impact. So that's what McKinsey as of now says. So let's see how it goes through the pandemic. There are a lot of financial institutions like banking and capital markets, insurance, asset management. That's where broadly the financial institutions play a role. Everyone has been, and I think will continue in the near future to prepare for the new normal. But yeah, obviously, still we have to see the full impact. It's new and I would say first time for a lot of institutions to see that. It's said that it's worse than 2008, Great Depression, and a lot of other events that have happened in the past. So I will just broadly explain how are these institutions working through COVID-19 right now, and what are their strategies maybe in the near future. Post that, we can see the impact on the whole financial services industry, and then what roles and opportunities that can come through for you, and how can you prepare for them. So banking and capital markets, obviously, compared to banks, there have been a lot of companies that have gone through this crisis and need leverage and are more susceptible to the economic shocks. As banks, they support with government-led schemes that provide emergency funding or loans to just have a standby liquidity. That's broadly through the temporary loan facilities that banks are providing right now, just to ensure that whatever economic shocks are coming through within household and companies can be overcome. Then we go into how is the risk and credit worthiness being obviously for the loan. With the corporate and household indebtedness increasing, we have banking risk, we have credit misallocation, directly or indirectly impacting the bank solvency. There's an increased risk. Everyone is in a state of shock and more, more in the fact that there is risk of getting the money back, whoever gets the loan. So there is obviously a re-evaluation, I would say, on credit worthiness. It's a little lenient on the terms of credit worthiness, but still, there have to be certain standards which have to be maintained across the pandemic also. Although adding to that stress, there are aggressively reducing interest rate, which reduces the interest margins and puts additional pressure on the banks. With the pandemic, everyone knows that we have moved to work from home. Same goes for banks and capital markets, and there is an increased spend in IT systems and infrastructure, which already add more to the expenses. Although on the positive note, it's what there have been. I think there have been a lot of efforts going on from years to move into fintech, which coincidentally has increased because there have been changes in traditional banking sector. So there's obviously a rise of fintech. So then coming to the insurance sector, I would say was well prepared than any other sector as of now, because they had SARS outbreak of 2003. They have a lot of like communicable and pandemics they have faced in the past, which they have modified their policies and their way of programs. Obviously, the full impact on mortality rates and everything still needs to be seen. It's not sure how they will go through it, what changes will come through. Obviously, they have a reinsurance program, they're amending the terms, but it may or may not cover pandemics and the whole scenario of those things. There is obviously a careful consideration on underwriting, allocation of investment assets and capital, because there are a lot of uncertainty still, which needs to be quantified. So they have to raise a lot of additional capital, which creates a problem for them also. Going to the asset management, I would say obviously asset management has a lot of stress on the front of regulated as well as unregulated funds, with a lot of risk on unregulated funds more than regulated ones. But still there is overall more stress because there have been lower asset evaluations, which reduces the performance fees. Performance fees is obviously like performance and management fees. It's a source of income for asset management model as a whole. Impacts the investors' liquidity. That's where the whole stress and risk is coming for asset management. There is obviously a broader impact on the investment assets, with commercial real estate sector being really, I would say really low, really down. Commercial real estate sector is really not taking any new projects. I have been working on real estate on some part, but it's really bad on those front right now. So that's one thing for investment assets to be looked into. And potential fee waivers, monitoring distribution and profit and losses is obviously going in, but there is still very high uncertainty until when this pandemic will go and how will it end. So nothing clear on those fronts. How the general impact has been evaluated in the industries, and if you see a lot of Deloitte, KPMG, where reports are coming, is the best way is to monitor profit and losses, because I would say it's a short-term thing, can't predict the long term. So monitoring profit and losses is one way. Benchmarking studies, managing economic environment, a lot of studies are going through into it, but can't be fully assess the potential impact. But I think they are still benchmarking it with the similar events, which can get a directional approach. There is obviously digital payments and improved infrastructure, improved technology, which is playing in. With that, we are getting into a lot of new technologies, use of new technologies. Then I would say focus on proper management of taxes, intercompany agreements, and transfer pricing, that's one thing companies are looking into, because that's an effective way of having their profits and their P&L statement, their cash flow statements managed, which is very important, working effectively and efficiently right now. And there are a lot of government schemes which are in theory, but may or may not be there in practice. So getting into the optimized use of those, study of those would help right now, because government is definitely having a lot of, I would say, a lot of schemes and a lot of incentives for financial services industry. Some of the impacts could be seen like, this is some of the BCG reports that state how people are concerned about their financial impact. I think from the first graph, everyone can see it's the financial impact is much more and higher in priority than even personal threat to health. Because there have been a lot of unemployment, a lot of furloughs, a lot of layoffs. So it's definitely one thing that is very important as a financial impact. With those things, people are moving into payment services like e-wallets, credit card and debit cards online, bank transfers online. Obviously, more and more people are looking into how can they get into the use of technology, because traditional banking is obviously shifting with this pandemic. So you can see age groups of 26 to 40 is even moving into those. So that's one thing. And we definitely see a lot of health insurance increasing. People are moving in. Although all the COVID-19, I have no clue on which services are being still included in the insurance. COVID-19 and pandemics are generally not included, but still a way to feel more, I think, psychologically safe and a more of peace of mind kind of health insurance has seen an increase though. There is flexibility, there is remote work in all the industries, and that is no different for financial service industry too. Before COVID-19, I think what the stats say is that only 29% employers used to have like more than 3/5 of their population working remote, versus now 69%. That's, I think, almost like 70% of financial services industry employers, I would say, are going for flexible or remote work. It is really challenging in the financial services industry, where day in and day out you have to monitor a lot of things, a lot of technology, a lot of algorithm tradings, which are really tough to be done from work from home kind of environment. But I would still say, I think health wise, priority wise on employees, that's how employers are looking for, which is a new normal for financial services. And almost 60% of financial services employers still feel they will have a permanent remote workforce. Companies are evaluating digital capabilities, because since they were not into that work from home environment category, they never evaluated on how strong IT infrastructure is required for so many people to be working from home kind of environment. And just going through the pandemic, you have a lot of I would say a lot of work, a lot of trading, a lot of stocks trading, and a lot of planning, budgeting, forecasting in the industries that goes on in financial services. So you need a lot good technologies, very efficient technologies for those. There are some employee benefits in this industry. You get more autonomy in the work, new trainings and skills, which may or may not be there in person. You have a greater flexibility. So recently a survey was conducted within financial services industry, which states that flexibility and vacation was one of the employees' preferences to get into work-life balance, versus employers' preferences were not there. Like it was on the list, if you see, it was on the first versus sixth for employees versus employers, which is now getting into more flexible environment. You get to do that. Coming on to the open roles and what to look out for financial services, more on the more on the phase of I would say economic research, market research, That's where some companies are looking for. There are a lot of openings on those because they really need to do research and studies how the industry will perform. Some kind of efficiency and effectiveness is very important. How my company itself is getting into a lot of automation. So if you have financial services knowledge, industry knowledge with obviously some kind of computer science or technology background, similar like MOT, management of technology, my management, my master's program. So it's a combination of some management plus computer science roles. That's where it is. Planning, budgeting, and forecasting, that corporate finance roles in essential services industry like food, healthcare, where there are a lot of people required right now. That's where you can look out for. M&A, transfer pricing is also trending with a lot of companies having mergers, acquisitions, transfer pricing, and taxes. That's one thing to look out for. And if you are in some kind of public policy knowledge and you have some financial services industry experience or want to get into one, I think this is the best time to be. I have a lot of obviously a lot of sources where I got this information for. I can share those, and you can have your like go through and let me know if anything works for you or anything you're specifically looking for in financial services industry. Any question that I can just stop and share like the screen. Any questions on this? If like anyone looking into financial services and that kind of industry, or what you guys are studying, Tim and Wahida?
Oh, hi. I'm actually a staff here. I just wanted to jump in on one of these tandem teaches and see what they were all about, especially when it came to like financial services, since we all can learn more in that area, right?
Mm-hmm.
Yeah, so really good job with everything.
Okay. And what about Tim? Can you hear me?
Yes, I could. I was waiting for her to speak first. I'm a management major, and I just joined in to listen about financial industry and how the impact will be. And thank you for the presentation. I really appreciate it.
Okay, yeah. So that's what it is. I am in one of the essential services industry, so it works well for me. But there are a lot of things in financial services, I would say, different perspectives. Some people are into investment banking, some are into corporate finance roles, some into stock trading, algorithm trading, those kind of roles. Very different for everyone. But I would say it's a tough time for all the industries, but still we can just figure out what opportunities can work well for us. That's what I would have to say. That's a positive side of my industry. Good, thank you. So that's all I had for today.
Great, thanks, Anshita.